Oh shit, my bad. I had the wrong chat out, my bad chat. I'm like, where's everyone? My bad, my bad. What's going on, boys? Vibes. My name backwards. Mubarak, what's going on? Ryland, Thomas, Chirps, LT, Paso, Felix, Jaden. Excited for today's class. Today's gonna be... I'll go through it soon. So, today's gonna be, because I asked you guys what you wanted to go through. Let me know if the mic quality's alright as well, chat. Let me know if we're good. So, wanted to go through psychology today. Some losses. And also mindset for 2025 and how we can prepare and whatnot. Luca, what's going on? Jackson, Yusuf, Harper. When was the last time you failed a challenge? Probably like, when was the last time I attempted one? Probably last month or the month before. What's up, Kenny? Matin, Archie, Aryan, Alex, Tom, Harper, Soup, Wayne Day, Ricardo, Rice or Reese? That's Reese, my bad. What's up, Mr. Habib? Sahib, how's it going? That's good, Harper. Emerald, what's going on? Maxed out FTMO and maxed out Funded X. Wogwood a vlog. Mr. Phillip. How do we go this week? I saw we got 2 funded this week, which was surprising because I didn't expect too much from a December standpoint, but Harry ended up getting funded. If you guys know Harry, he's been around here for a good couple of months. He was struggling a lot as well, but you know what, good on him for not quitting, because most people would probably quit at this point if you're getting dicked down by the markets at this point and you're having fat losing streaks. So you know what, props for him to for sticking through it. If he can do it, anyone can do it, because this guy was pretty lost a couple of months ago. Whose Mansory was that? Somebody that's some Fijian dude. Oil money, I think. Do you always enter trades on max? No, I enter on MetaTrader 4 or 5 or C-Trader, whatever. Nothing on the computer. But Ron, what's going on? Nick, what's up? How did Gun win? Yeah, I was actually, I thought I lost as well. I was getting ready to put another multi on, combine the rest of my legs. I was actually getting ready. I'm like, oh, okay, go on. That's nice, Harper. Good to hear that. Honestly, appreciate that. Larry, what's up? Oh shit. What's up, Larry? Was already funded before I joined your academy, now working towards a payout. Nice. Hopefully can get you there in 2025. Young boy. You can put MetaTrader on Mac, can you not? Yeah, but you're using the outdated 2003 software, so that's early 20th century software. I'd rather not, to be honest. Alright. So let's get straight into it. Won't be too long of a session. I'll try not to drag it out and just get straight to the point. So psychology session, going over losses, and I don't really like doing too many psychology and mindset because I feel like it's a bit of yapping sometimes. I like to do more technicals and all that stuff, but I do understand that psychology is important, so we still have to touch on it every now and then. So that's why we're going through that today. And especially in December, you know, there's a lot of free time there that we can use to help us prepare for 2025, so we'll go through it. If it gets the job done, it gets the job done. What's your stake on your bets? High risk multi, just $200 slaps. Nothing crazy, I'm not a gambling addict. Alright, so first thing I wanted to go through was technicals, common losses from a lack of perspective, and not understanding where structure is heading. And over the last couple of weeks, including myself, I got caught up in some of these losses, which I did explain in some other masterclasses. But I do see people making the same mistake, and there's nothing wrong with what they're doing. They're still taking a setup that technically meets their criteria, but the thing is with this, they just have a lack of perspective because they're not looking at their external factors properly. So, live example of this would be over here. I'll show you guys what I mean. So one of the area that we can get, potential losses is from something like this. So for example, let's say we have a 15-minute break structure over here, and we do protected high, right? So oh my god. So as long as protected structure is being respected, we can assume that structure is going to remain bearish. And if we're on the 15-minute, we know that if we're strictly trading the 15-minute and the 30-minute, we're not going to be too focused on longs because there's no evidence that longs are going to play out because we're just getting new lows and protected highs are being respected the whole time through. As long as protected highs are being respected, that means that shorts are going to be the stronger move. Any move up will just be seen as a corrective move until price takes out a protected high. So, for example, we get a move down here, right? Structure break, obviously, and then protected high. Anything that happens here where we get a move up, let's say that you're not on the charts for this period of time and you don't have a look at your 15-minute, you don't have a look at external factors, and you're on the lower time frame, you see that lower time frame order flow shifted bullish and there's a move up. Completely fine. Only thing is what you're trading might be pro trend on the lower time frame, but on the high time frame it's counter trend, and that can be seen as lower probability. Now ask yourself this: is this what you want to be taking on a funded challenge, on a funded account, even on your personal track record? Like you guys already know about the hedge fund opportunity I've given you guys, where if you can give me a track record on a regulated broker that's with a low maximum drawdown, you're returning stably and consistently each month, I'm happy to put it forward to my financial licensed person, which has on the record said that he'll, there's substantial funds up for grabs in terms of funding. And now think about it from this standpoint: would you take low probability trades, counter trend trades on a big account that's 7 figures, 6 figures, maybe even 8? You probably don't want to be doing that, and I'm going to touch on it a little bit later, but I want us to focus on higher probability setups and taking less setups, because that's how all my months were green this year on my track record. So it was just from taking less trades and returning, it was between 0% and I think my highest I got this year was around 25%, I think in March. Just by trading less time in the market, less time in a risk on environment, stable returns, connected to a trade copier, and just look for high probability setups. Because a lot of us just want to rush it. We just want to get funded ASAP, get paid ASAP, and that's a mistake in itself. Because if you're rushing the process, you're gonna make mistakes. You're gonna get into drawdown, and if that drawdown goes on for an extended period of time, then you're gonna end up blowing the account, and then you have to buy another account. So not every setup that has an entry model is going to meet your criteria. So for example, it's something like this where price is pushing up like this, jump into a lower time frame, or even the 15-minute. there's a setup here. Okay. So we see this, where price is putting in new highs on the 15 minute, right? But we always have to pay attention to what's happened on the left. That determines whether this is counter trend or if it's going to be a pro trend move. So for example, we have an internal protected low over here. Will this be a 4 pip stop loss? Okay, no, because we're on the 15 minute. Okay, cool. For argument's sake, let's just say that we've taken this after a rejection candle and we're covering the protected low, right? And we're just looking to target this up here for a 1 to 2. Now, the thing is with this, it's technically one of the high probability models, right? Because it's targeting the weak high, but it doesn't actually get there, right? You must think, like, if you just look at it like this, right? Look at it like this. Okay, cool, looks good. Price pushes up. You have the weak high, internal break structure, come off the protected low, cover the protected low with a stop loss as well. Looks good, it's heading well. It doesn't get to the weak high. And you're probably thinking to yourself, oh, it was just a 2.3 risk to reward and I couldn't even get there. Like, why is this trade, backflipping on me? And there's a couple ways to troubleshoot this, and this is like a common loss. So I just want to figure out like a common scenario where this would happen because you're not paying attention to the external factors or the 15 minute or whatnot. So the last place that we broke structure over here on the left was this 15 minute structure break, right? Structure break, and then everything else is just one leg down, lower time from order flow shift over here, and then we have a correction over here, and then we push up higher. Somebody that's not paying attention to what's happened on the left and how structure is positioned will see this and be like, okay, cool, longs look good, I'm happy with longs. But one thing to take into consideration is we never took the internal protected high, so therefore any form of long that's under this protected high is counter trend and it's going to be a low probability setup. You'd much rather wait for either option A, price to come up into the protected high or come up into some form of valid supply zone and get confirmation of that and look for shorts so you can be pro trend again, because this is a correction, remember? Everything that's happening from this point onwards, once we put in that low and don't take that protected high, anything that happens here is just a correction. Generally a lower probability move. If we come up and we take that protected high and then now, okay, that protected high gets turned into a break of structure, 15 minute, 30 minute structure break. Okay, cool. Now we know that protected highs are not getting respected. A structure break was put in and now there's a protected low somewhere. Now it starts to shift and longs look like they are high probability compared to shorts, but that wasn't the case here. So there's only two options here that realistically make sense for a high probability outcome. It would be for price to come up into this protected high over here or a supply zone or whatnot that's valid by our criteria, and to look for shorts. And if we don't get confirmation off of there, okay, cool. Wait for lower time frame order flow to shift. Once it does, then we can look for shorts. Now, obviously, lower time frame order flow shifts over here, right? But we know what a high probability criteria is. We know what pricing is. We know that when price comes up into the protected high area and then we get confirmation off of there via lower time frame order flow shift to head down lower, compared to something, just over here in the low in the leg, we know that having a deeper correction and having that lower time frame order flow shift is a much better opportunity pricing wise to look for shorts compared to looking for shorts for something over here. Or confirmation to know when prices respect rejection candle. So, for example, just waiting for a high probability outcome. Let's say that we don't get that 15 minute structure, but now we know that lower time frame order flow shifted and now it's bearish, right? Where's my, here we are. All we can do realistically is look for opportunities on the lower time frame. So you saw that we had that long setup, right? Because we weren't paying attention to what was there to the left. But, you know, we dissect it. Okay, we see that lower time frame order flow shifted. Cool. We're not always going to get a setup as well. Like I said in the beginning of the stream, not every setup that forms an entry model is going to be valid for us. And we have to have strict criteria to filter out the bad trades from the good ones. But sometimes we don't get that pullback, you know, it doesn't come up into a supply, or it doesn't come up into a protected high or whatnot, and you know, we don't get the setup. For example, over here, nothing valid for me, but we do get something like this over here forming, right? Patience is probably one of your best friends when it comes to all of this. So double check onto the 3 minute, have a look if that structure is still there, because we like to confirm structure on the 1 minute and 3 minute just to confirm the structure breaks. So we can confirm that credibility of the zone. Cool, structure breaks there, protected highs here, cool. Now, internal protected high, 3 minute. Now realistically, we just filter from the 1 minute to 3 minute, right? Just to see if there's anything that meets our criteria. And in terms of zones, I mean, could use something like this, but the zone does end up failing before a rejection candle, right? So logically, there's no entry point for us. Even though it does have inducement, it does make sense, right? It looks good, but there is no rejection candle to give us an entry. The rejection candle comes after the zone fails. So if the zone fails before any form of rejection candle, invalid. Okay, cool. We don't need that. Any other valid zones? Not really. So the only thing that's possible for us is a protected high, right? So for example, price comes up into here, gives us a rejection candle. We can use this. Cover the protected high. Cool. And just look to target a weak low. Same exact model, but this one ends up playing out because we understand what's going on in the high time frame. You guys understand? 1 to 2 over here, and you take that. We just invalidated other potential areas to enter off of here. The only possible area for us to enter here was off this protected high, which gave confirmation. So you have an entry model over here, and then you have this entry model over here on the 15 minute that also presented itself. But this one ended up failing. This one ended up succeeding. Only difference is we built this one from the high time frame up. We understood that, okay, you know, even realistically, we could have went to target the 15 minute, 30 minute week low over here, right? We could have done that, but highest form of probability for a setup is to target the initial week low on the lower time frame, or just the initial internal week low, which was this one over here. Big difference between this and this in terms of the externals, because we understand what's going on over here with the externals. We understand that, okay, correction over here, move down, 15 minute structure break, protected high. Okay, we know that price is heading down on the 15 minute, 30 minute. We know that the move up here is counter trend, and we can understand that usually counter trend moves tend to go sideways for no reason at all. How's it an initial week low? Because that's the first, like you have that 15 minute week low over here because the 15 minute respected its protected high, right? So that's also a week low you could technically target because it's a week low, right? But on the lower time frame over here, our setup over here, this is the first week low that we come across. because 3-minute structure break. Okay, cool. We have this new low. Has its correction. Does it take the high? No. Respects the protected high. Rejection candle. Cover the protected high, of course, for every single setup. Because let's just say you went for a flat 4 pip stop loss, right? Flat 4 pip stop loss because you're hard-headed. You're going to get taken out. There's no... Everything that is done with this plan and system is just for a reason. I don't say cover the protected high or cover the protected low for no reason. Yes, sometimes you might get whipped out over here, but if you followed your criteria and you followed your plan, you can't be angry at it. And okay, cool. So that gets taken out. Okay. Another structure break over here. Okay, 3-minute. And now we get a new internal protected high over here. Now, on this protected high over here, it looks like there's a structure break, right? Looks like there's a structure break. But a smart person would look at this and be like, okay, let me just double check my externals. Let me go into the 5-minute. Let me go into the 15-minute. Let me just confirm that that structure break is legitimate. And if we look onto the 5-minute, okay, it's a valid structure break over there. No complaints. Check into the 15-minute. It's not valid on the 15-minute. So every single setup, we always check the neighboring timeframes on the entry model to confirm the structure break. And sometimes it's going to give you confirmation on all of the 1-minute, 3-minute, and 5-minute. But then it's not going to confirm over here on the 15-minute. So what does that tell us? It tells us that the setup's not on the 3-minute, 1-minute, or 5-minute, because our high time frame is telling us something completely different. So we can disregard the low time frame for now. We've taken advantage of it. It gave us a 1 to 2. And now we know there's a weak low over here because we've just failed to take this protected high. So we can see that that 3-minute that we've marked out here is also valid on the 15-minute. If I clear this out, this is a clear 15-minute structure break. This is a clear 15-minute protected high and 30-minute protected high. It's still visible. 30-minute did not close above 1 hour. Is it there? 1 hour is still there to an extent, but it's also clear that we didn't clear the high over here as well. So 1 hour is still also telling us the same thing. And then we look over here. So we come back onto that 15-minute. That's a 15-minute, 30-minute, and 3-minute structure break. Cool. That means that there's an internal protected high over here. Let me move this back so it's out the way. So we know this is an internal protected high over here. Cool. This was the original setup that we would have taken if we weren't focused on what was going on over here, right, to the left. Understanding where price is heading, understanding what protected highs are being respected and what protected lows are being respected. And if we're not getting our protected highs taken out, then we're clearly bearish. So we can get rid of this for the time being. And we see that, okay, now order flow is shifted bearish over here on the 15-minute as well. Right? On the lower time frame, we've shifted bearish as well. Come off here, off the protected high, or off these highs or whatnot, and now we're pro trend again because we're heading down lower. And now we have this over here because we clearly failed to take the protected high. This isn't 50% of the candle. By the way, this is no... A doji candle does not count as a structure break. I've said that a lot of times in other masterclasses. You need to go back and watch. So as soon as one rejection candle comes in, okay, we get that there. And obviously we'll cover the protected high. We can use a 4 pip over here, works perfectly. and then we can just look to target a weak low over here. And the reason why, you know, these two play out as opposed to something like this playing out where there is an entry model there, right? There's an entry model here for longs, there's an entry model here for shorts. Why are the shorts playing out? It's because the externals are bearish. It's because these longs that you're trying to take are counter trend to the 15 minute, and that brings me back to my original point that most of the losses that we take come from not understanding the external factors and being counter trend to it. Because it's a good model, it looks good here. After the you kind of no doji, bearish doji is a rejection candle. Yeah, dojis like this can be a rejection candle. In terms of confirming structure breaks, it's not. That's just my own criteria. That's how I do things, and it works well for me and other people. It's an internal protected high because this high put in a new low. But going back to my original point, back to the advanced stuff that we're here for, the reasoning for these longs not playing out is because you don't understand the external factors. You don't understand where price is heading. And if we're getting that protected high respected, and we're getting that lower time frame order flow shift, we have confirmation that we're going to head down lower, and we have confirmation that there's a weak low over here. Yeah, you can come down here and target the weak low over here for a 12 risk to reward, but like I said, target the initial weak low if you want a high probability outcome, because based off my own experience, there's a discrepancy between, you know, targeting weak lows that are initial like this, that are the first weak lows that we can target, compared to targeting the external weak low, because a lot can happen. Obviously it's a longer trade to target all the way down here, and news can happen. Price could do something like this, which is very probable, you know, and just mess around here and then push back up. So in terms of what's quicker and what has a higher win rate, it's targeting the initial weak low. Does that make sense? In terms of a scenario where you're not reading things properly because you don't understand what's happening over here to the left. And there's an entry model here for longs and there's an entry model here for shorts. But one's going to be a stronger move because it aligns with your 15 minute and your 30 minute, and it's going to be considered pro trend. If it's considered pro trend, then you're on the right side of the market, and the market's going to do more of the heavy lifting. And those are the type of setups that you want to be taking on your funders. Those are the type of setups that you want to be taking on your challenges. And, you know, even if you get hedge fund money in the future, that's the type of stuff that you want to be taking. You don't want to be going against you know, protected structure. With the rejection candle, because I marked it out like this with the marker, it's after the rejection candle closes, that's where the entry would be, essentially. A plus setups, or even, because all of these setups are essentially protected high setups and protected low setups, which is what I prefer. That's also high win rate models if you just strictly take protected structure. And the thing is with this, you're not going to get a protected structure setup every single day. That's the thing. You're not going to get one every single day, because sometimes price might take a while to get into that protected structure. But if it gives confirmation of protected structure, I'm happy to live with the results because I'm following my plan. I've understood my external factors. There's an entry model that formed. I'm covering protected highs and protected lows. If price comes off, okay, cool. That means it's just shifting, and we're going to obviously push higher, and it's the end of the trend. I'm happy with that. So obviously that's one of the common scenarios that we go through for losses. It's just not understanding the external factors, and sometimes happens to me as well because I don't do a full analysis and I get a bit lazy sometimes. As you guys saw in some of the recent masterclasses, sometimes you just get a bit lazy or you just overlook some things. And the short was from a protected high, not a supply zone. Protected structure setup. Alright. So moving on to a bit more of the psychology aspect of things. The entry confluence is price sweep and that protected high. There's still some form of sweep. Remember, inducement, imbalance, any form of sweep or imbalance is valid for my setup. Alright. Moving on to the psychology aspect of things. Honestly, the best advice I can give is obviously speaking from experience because I've done it before. You know, they don't hand these licenses out to nobody. They definitely don't hand them out to dumb cunts. But I wouldn't have my focus set on trying to make a payout in December or trying to pass a challenge in December. Even if you have a fund completed in December, which a couple people do, would not be trying to make a payout until January 2025. And what I would do instead is go through some of my goals and go through some of my data on my trading plan and system and just redefine it for the following year. And it goes back to what I was saying earlier in terms of looking for high probability models only that you would be happy to take on a funded, on a challenge, on a hedge, on a personal. And the way you do that is by going through your data and filtering out, you know, for example, for me, I'm going to be avoiding most setups that don't cover a protected structure. So if I'm, you know, taking a setup that is in the middle of the leg from a supply zone and it's not covering protected structure, feel free to crucify me, because I just want to focus on protected structure because I know that's my bread and butter. And I don't know about you guys, but I feel like I can live with a loss from a protected high or a protected low compared to a supply zone in the middle of the leg or demand zone in the middle of the leg. Because when you get taken out of a supply zone or demand zone in the middle of the leg, there's always the possibility of us continuing higher just a little bit, maybe into a higher supply zone or a lower demand zone, or the possibility of us moving higher or lower into that protected high or that protected low, and then continuing out. So realistically, what you had was just an entry issue. You entered a little bit too early when we're still in the middle of the correction. That's the type of shit I don't want to entertain going into next year. So that's one of the things that I've redefined in my own system, where I'm just going to be focused on those protected structure setups, because there's been so many times where I've just come into the market and let's say that there's no setup. Okay, cool, I don't see anything, come back later. But then when you come back later and then sometimes you get the timing right and you come back and you see prices at protected structure, like you feel good. You feel good when you take that setup because you're like, okay, it's at protected structure, externals align, I'm happy to live with this. Like price is struggling to break this low, it's giving us a rejection candle, okay, cool. Like you're happy to take it. Like for example, like what I mean by that is like on the screen right here, you know, okay, 15 minute setup, structure break over here, now we're having correction. Let's say that, you know, you've come into the market and it looks something like this, right? You're looking at it, it's not in the supply zone, it's not in the imbalance or anything like that. Like there's guesswork here. You don't feel like for me at least, I know the model. I know my model like the back of my hand, and something like this is like there's actually nothing here for you to take. And then let's say that you come back later, and it looks something like this. Like you guys know what I mean, right? It looks something like this, right? Like you come back later and it looks something like this. Okay, cool. There's no rejection candle here yet, but now it's in protected high. So now you're like, okay, I'm happy to keep my eyes on here. And then you get a rejection candle like that, and then you're happy to take it, and you end up taking it. Cool. because you already looked at your externals. You know that, okay, shorts are going to be probably going to be the stronger move today, because we haven't taken out any 15-minute structure to the upside, respected our protected highs. But then, you come into the market when it's something like this. I genuinely feel good when I take protected structure setups, like, just compared to even the imbalanced setups. Like, I love protected structure setups, especially when they sweep. When they poke above that protected high and they close below and they give you a rejection candle, I like that. And when the externals align, I like that. I feel good. And it feels even better when you haven't been on the charts most of the day. Let's say you have an alert at your protected highs or your protected lows, just trading less. And then your alert triggers, okay, we're at protected structure. Externals are still aligned. Does it give a rejection candle? Cool. Like, you're supposed to feel good when you take it, because you've done this particular model so many times. Not the 3 or 4 random zones in the middle of the leg. I'm not saying I feel good just to G you guys up. I'm saying I feel good because I feel confident with these setups. Even if it doesn't win, I'm like, okay, cool. I can't fuck up anymore, because this was the last possible place to look for shorts. Because if, let's say that this ends up failing and we push up higher, the protected high gets taken out and there's a structure break, and now structure's turning bullish, order flow's turning bullish here. Because now we're respecting demand and we're putting in new highs. Okay, cool. Now I can look for longs. And I'll just wait again for another protected low setup to form. I think where we go wrong is where we take it in the middle of the leg, but then we know that there's a potential 2 or 3 more losses that we could take just to get the move down. So instead of doing that, focus on just pure protected structure. Well, that's how I'm redefining my own system. You can do whatever the hell you want. I'm just letting you guys know what I'm doing, so I can give you an example for what I'm saying over here. So also defining your goals. For example, December 2021, I passed the 200k, my Forex funds. One of the goals for my personal account is to obviously trade less again, have a similar year to this year, but to also improve and have a lower maximum drawdown. Lower maximum drawdown, stable results. And that's one of the main objectives for me this year. And in terms of your funded goals, don't compare yourself to other people. That's also what I did wrong at the start. Just focus on what you're doing. Because then greed comes in, all these other emotions come in. Like, I saw a lot of people making 5 or 6 figures, especially in that 2021 period when I got that 200k. I'm like, alright, I want to make 50, 100,000. I want to be like these guys. But the thing is, most of these guys have like a $500,000 equity or whatever it may be, and it takes them less effort to get to that $100,000 mark or $50,000 mark with profit. And that's the mistake I did with my first account, because I had that account up to plus 30,000. I wish I could show it, but obviously the site is frozen it because they've bloody rug pulled. But I had the account up to 30, and there's no point in me lying about this, because I only ended up getting 13,000 for that first big payout. Like, why would I say I have more just for no reason? But I got the account back up, then went on a losing streak, pretty big losing streak, from 30,000 all the way down to 13,000, which is what I got paid, or 10,000, whatever it was. And that's because I was comparing myself to other people, and I just wanted to make more. And I was definitely not sticking to my own plan and my own system and what I was capable of. So define your goals. Even if it's a 100k account you want to get funded with, okay, cool. 100k account, 2% payout, cool. At least I've got a 2% payout out the way. just remember that most traders are not dropping more than 10% a month for multiple years. Nobody's doing that. The guy that has given the opportunity to you guys for funding and asset management and whatnot, he told me that his best traders are doing 8 to 10% a month, and maximum drawdown is between 15 and 20% a month. That's what his best traders are doing. Like legitimate track record, everything. So all you gotta do is just be consistent and be stable. 2% payout, cool. Start the personal account in January, work it all the way through to December 2025. Trade copier, link it to your funders, do whatever you want to do. As long as the results are stable, and as long as if you're trading more than what you're doing in if you're trading more than what you've done this year on a day-to-day basis or week-to-week basis or month-to-month basis, you're probably doing something wrong. I just don't see a positive correlation between trading more while being in a risk-on environment. It's just not a positive correlation because you're in a risk-on environment. You have to learn to walk away. You have to learn to have a profit target that you can achieve. Some people can achieve a 5% profit target. Some people can achieve a 10% profit target in a month. Some people can achieve 2%. Goes back to what I was saying earlier as well. Just be conservative and achieve what you can achieve in terms of your profit target. So one more thing on the goals: break down your goals in simple steps. Do not compare yourself to someone else. Obviously that was one of the things that were holding me back, and I wasn't fully aware of the difference that capital would play in terms of percentage, because maybe I was doing 5% on a 200k account and that guy was doing 5% on a 500k account, and I didn't comprehend that I'm actually trading the same performance wise as this guy, but because he has more capital he's making more money. But technically you're on the same level as him. That was a long class, chat. And Kenny's bringing up some good points here. Remove every bit of ego you have. Removing decisional POIs, nice. Still able to use supply or demand zones close to protect the structure. I like that, because you're still going to be able to cover protect the structure with that stop loss. Very nice. I think that was a pretty good class, to be honest, chat. Phase 2 is better. Always a phase 2. If you can't do a phase 2, then like you're just looking to get lucky on your phase 1. Let's be real. Usually I'm conservative, but it really just depends. Sometimes I'll have a good month, sometimes the month will be average. But give or take, it'll be around that 5 or 10% mark per month. That's good, Sam. I hope I liked mixing this class up with technicals as well as psychology at the end, just a little bit of psychology, because I'm aware that I don't want to be one of those people that just mindset this, your mindset's this, your mindset's that. It just because it can be seen as yapping, so I just want to mix in technicals so I can and also in terms of what I was explaining with my with redefining my system. I also explain that here, so I don't want to just full yapping masterclass. I want to also include technicals with examples and stuff. It's a website for the trade copier. Thank you, LT. Alright, these type of okay, good. So you guys like the technicals and psychology. A little bit half technicals, or mostly technicals, and a little bit of psychology. All right. So chat, yeah, you guys know that the I'm gonna do outlooks now, really quick, but you guys know that that offer's on the table. Anyone can give me a good track record. I'll send it over to the people, and if they like it and they want to fund you, happy days. Doesn't cost you anything. Just build a good track record on a live account, regulated broker, and you know, if they give you 5,000 or 10,000 or 15,000 or 50,000 or 100,000, whatever they want to do, still free money at the end of the day. So just trade well. Okay, so 30-minute. Alright, this looks like a fat range here on the fat range. Daily's coming. Okay, protected low. Alright. I'm not really a fan of what's going on over here, because it's just failed to clear these lows over here, but now we're pushing up higher. Okay. But then we had this structure break over here. Structure break, protected high. Structure break, protected high. But now we failed to put in a new low over here. So now... goodness. Oh wait, that's... whoops. My bad chat, I was still in replay mode. Whoopsie daisies, that was embarrassing. Alright, here we go. Okay, so we've come into that protected low essentially. Nice. Very nice. That makes things a little bit easier. Okay. So, quite clearly, structure break over here. Also, this one's to be aware of. Protected high. Cool. Protected high over here as well. Cool. The way I'd play this, alert at the low, of course, and then once we come into protected structure, we get to see if it holds or not. If it holds, cool, good look for shorts. If it doesn't, we know that order flow shifting, and longs are probably going to be probable, because even looking at the daily, you know, we are coming into this protected low over here, trying to see if 15-minute order flow shifts bullish. If it doesn't, then we're going to probably head towards this weak external low over here. In terms of DXY, much of the same. Did not put in the new high over here, so if this comes down lower, that means that AU is going to most likely push up. So we got that in mind for the externals. 15-minute, 30-minute over here. Did we put in a new low over here? We did not. So we know that there is a weak high over here. And we know that, is that a structure break on the 1 hour? Actually, I don't like that structure. Did that low clear on the 1 hour over here? It did. So, some evidence here that DXY is probably going to continue up higher, because there's a structure break there on the 1 hour. And the protected high is over here. So, okay. That actually doesn't look clear to me, to be honest, if I'm looking at it from that perspective. So what I'm going to do is, because here it's a lot more clearer for me on the 1 hour, failed to close below. And there's also nice 1 hour. Okay, we're just going to leave it this for now, chat. So no close over here. And let's say, for instance, if we clear this high over here, which is also protected because of this structure break over here, and then it'll give us a clear indicator. If this high goes, then we're probably going to head up towards that weak high, and then we'll have this we'll have this low marked out as well for an alert. So if it does come down lower, then obviously we're going to respect what the high time frame is saying, and we're going to resume that bearish order flow. Sort of looking at it like this. It's a little bit cooked because of what's happening over here, but I'm looking at the structure like this. Yeah, it's a bit cooked, isn't it? So this structure breaker over here, and then this protected low. It's actually an ugly chart to mark out, to be honest. Haven't had one of these in a while. Got 3 weeks off work, studying all these gems. Looking forward. Keep me updated, Sam. Feel free to use that markups chat and the questions and the answers. Alright, chat. I think we'll wrap it up for today. 50-minute sesh. Hopefully you boys enjoyed and learned a couple of things. And that's gonna be it for today. So I do hope you boys you know, understood some shit, technicals, the reasoning for losses, even though you have a valid entry model over here, but you lose this trade, and you know, you have the exact same entry model but for a short. Why does that win and why does the long not win? And you know, it's obviously what I explained before. Try to explain it as clear as possible. But yeah, we're gonna wrap it up for today. Thanks for the thanks for popping in, and I'm also gonna switch brokers in next year as well. I might have a regulated broker deal with Pepperstone, so I'll give that a shot, most likely. But yeah, just remember, in January, give me some track records throughout the year. Even if you don't win every month of the year, as long as you turn over some form of stable return with a low max drawdown, I'll send it over to them. I've got 2 financial licensed people that want traders to trade for them. You guys just meet the criteria I set for you guys, I'll send it over, no hassle at all. You know, and it's just for people in this community. I'm not taking on any other people because I don't really care about other traders. Don't even have track records on social media, so I don't really care about them, to be honest. Alright, boys, appreciate you boys, and I'll catch you boys on Wednesday. Maybe futures live stream on Wednesday, we'll see, because I think AU is going to be pretty dead next week, so we'll see what the go is. What if the regulated track record starts from 1k? That's fine. You know, even if you start from 1k and you have a good tracker throughout the year, maybe they give you 10k. A 10k, you know, they fund you a 10k, whatever it is, it's still better than, you know, having nothing, I guess. But at the end of the day, it's their decision. But I showed you guys the messages that I sent to them. One more time before I go. I said, what I say? Funding asset. I think I sent this was one. Let's discuss it all in person. So I gotta go to Sydney and talk to this guy. And current financial license guy, easy done. Show me the track record, and he'll raise substantial funds. So on the record, you know what the man wants. Give him a good track record. If you were to have a positive record with low max for 6 months, would you be eligible? I would personally. Look, I don't want to waste his time because I don't want him to get the shits with me. I'm not accepting anyone that gives me a 6 month. You have to give me a year, because then it's gonna look bad on me. So I'm not. He might accept the 6 month, but I'm not accepting a 6 month. I want you guys to not give me a bad reputation with those guys. You guys gotta actually, you know, put in the work. But and they just want to have a look at the My FX book as well, by the way. So if you're using a different broker that's not Fusion, cool. Just give them the My FX book, and happy days. But we'll wrap it up for today, chat. Thank you for tuning in, and I'll catch you boys on Wednesday. Enjoy the rest of your weekend, and yeah, let's finish off the year strong. Yeah, it is for the best. Like I said, that's look at what you got. Look at what you just said over there. Like one quick thing, chat. Remember how I was just saying at the start of this masterclass? Don't rush things, because when you rush things, you tend to make mistakes. Just a random question. Like I know it's a normal question, harmless question, but you asked me 6 months instead of a year because you want to rush the process, or you're eager on it, whatever it may be. Just take it as it comes, and don't rush it. Doesn't have to be a flawless run throughout the year, but if you can give a stable return, that's all you need. Alright, boys, enjoy the rest of your day, weekend. Let's get ready for 2025. Spread the word of me, to your friends and shit, because I want to get more people funded. I want to aim for 500 funded traders next year, so spread the word. I've got 60% affiliate codes for you guys, so if you can give me some good people that want to learn and not duds, happy days, bring them in. Get them funded, and then they can just go fuck off. As long as they add to the count throughout the whole year, and I do my job and get them funded. Bro, pop the honey pack. How'd you know, bro? How'd you know? Boys. Latest Cade. Take it easy, Wayne Day Soup, young boy. Opportunity will be available as long as I'm licensed, which will be for the foreseeable future. So, do your thing. Thank you, my bro. I appreciate it, bro. Alright, boys. I'll catch you on Wednesday.